Moon Platoon, ladies and gents, Professor Meeple and I have always said Robinhood doesn't care about you, but who is at risk of becoming the next Robinhood? TD Ameritrade. AMC continues to be rammed and hammered by the mainstream media, and it doesn't seem like certain brokers want to help the cause, including TD Ameritrade. How could we have seen this coming? Well, if you guys stay until the end of the video, if you guys click that like until it hits 1,300, and if it doesn't quite hit 1,300 yet, then go ahead and go down to the comment section. Tell us which like you are. But if you watched the show, you could have seen this coming. Ex-TD Ameritrade was on CNBC, the king of FUD. And they went and said, hey, when are you guys going to be satisfied, right? We talked about that FUD article. We talked about him going on. He is the ex-TD Ameritrade CEO, but he is essentially signaling where TD Ameritrade is. First, the news, and then exactly how you can change your portfolio, the amount of broker diversification that you have, and your chances of surviving the FUD so that we all get to Tenny Town together here and to the end of the video. So, Professor Meatball and I, let's kick it off. TD Ameritrade placed trading limits on AMC yesterday, which means it was on Friday, as the stock gyrated wildly. The brokerage firm limited AMC trades to customers with capital on hand and cut off trading on borrowed funds. TD Ameritrade is expected to place some restrictions on options trading as well. For its part, AMC brought in $587 million last week through the sales of shares in a move to strengthen its balance sheet. AMC is also asking for shareholders to authorize the sale of an additional 25 million shares for 2022. Those shares will be available to be sold by 2022. And if you guys heard the Mr. Adam Aaron Silverback interview, he is not planning to issue all of them in 2022. It's just that he won't be able to issue them in 2021 at all. It's done. It's impossible. How could we have pictured that TD Ameritrade is going to start perhaps a brand new convention of showing up in Congress, just like Vlad did for Robinhood? Well, we could have. We've told you before what this ex-CEO said. Let's listen again.
Now, with AMC, with GameStop, with some of these other so-called meme stocks.
Yeah, I think you got to break it down, Becky. Good morning, by the way. I think you got to break it down in terms of, you got three types of investors. I thought the three of you did a good job this morning talking a little bit about that, but you referenced two. You've got the long-term investor that basically every now and again will rebalance their respective portfolio. But then you've got the long-term investor, though, that also has a strategy where they trade around the positions, where they're trim it to strength and they'll add on weakness. They could do 10, 15, 20, 25 trades a month. But then you've got the day trader, and that's exactly what we're talking about now. And the concern I've got is that, you can have arguments why there's a fundamental argument why AMC may be going up. You've got people going back. You've got John Krasinski movie that got great reviews over the span of the week.
John Krasinski. Okay, first of all, he's going to be real fun to create a thumbnail of because of just how wild and gesticulating his body and actions are. But the second thing is, hey, take a look at how he is dodging the question, right? Go ahead and talk about three different investors. Go ahead and talk about anything other than the fundamentals, anything other than the patterns, anything other than the short squeeze potential, right? He is going to try to dance around, and then we have already covered this before. He is going to straight up tell you when is enough for you to be satisfied. You greedy investors, you should be ashamed of yourself just buying and holding a stock. How dare you? Now let's take a look at when his argument is going to flow into blaming you.
Weekend. But then I give AMC a lot of credit this morning for having said that, the fundamentals in their company are not matching the performance of the stock. And that's going to cost them some money in terms of what they're trying to raise. But I give them credit for that. At the end of the day, sometimes you can make a lot of money, and it's not a fundamental trade, though. It's a technical trade. And when the day traders, when they did with GameStop a few weeks ago, and what they're doing now, it's a technical trade. But what we got to be conscious of is that at some point, and you said this earlier today, the market's going to turn around. The technicals are going to wear out, and they got to be prepared for a down move in that. But so far, I think
technicals are going to move out. Well, that could just be another technical trade, right? Is that if the technicals no longer support your trade, that is a technical trade in itself. They don't just wear out, right? It might be simplifying it for the regular CNBC viewer, and perhaps it's just a grandma sitting in a chair, or I guess a baby. I'm not exactly sure. Comment down below what you think the CNBC normal viewer should be.
They probably made a little bit of money, and I still would question the institutions that I've heard so far have lost about $5 billion in their shorts. And if they haven't figured out now that they could get hurt through short squeezes from retail, that's something the institutional investors got to learn.
Yeah, that's a lot. You gave us
a
big, broad overview. Joe,
Yeah.
just using the term day trader, it's not something we use anymore. That was the late 1990s, early 2000. Is this the same? Is this different? Does it rhyme?
No, Becky, I think there's a great parallel there. I think the day traders came around in the 90s for a couple of reasons. First, the internet. Obviously, we got great technology today. But second, we had an incredible bull market. The market went bananas there the entire second half of the 90s. Then we know what happened. March 2000, it explodes. And we had a very difficult 3-year recession. But we've had a great 5 years in the marketplace. And as long as the markets continue to do well over time, really do well, like month to month, the day trader is going to be okay. If we go into a bad year, the day traders are going to get wiped out. That's what happened in the 90s. That's what would happen this time.
They're trying to conflate you with a day trader, someone who scalps the stock. And we have been telling you nonstop that scalping the stock not only hurts your ability to trade during the squeeze, hurts everyone else's chances of the squeeze as well. But mostly it's just a dangerous thing to do if you don't know what you're doing, right? We don't advocate day trading if you haven't had the education and the skills, provided that you go out and actually learn the fundamentals, right? Learn the technical trading, which if you search Andrew Mo, TEA 101, you'll be able to get your very first dose of what to look for in terms of patterns.
Until then, you would just tell the institutional investors beware. You wouldn't get short any of these things?
Well, I don't think up until Plotnick and Melvin Capital a month or two ago, I don't think any institutional investor thought that
Plotnick? He's talking about Gabe Plotkins. The CIO of Melvin Capital, Mr. Melvin himself, his grandfather founded the company. Not since Plotnick landed on the moon.
retail market would be able to come together and put them in a short squeeze. But we learned something now. That's what's happening now. Well, the institutional investors, they're sophisticated people. They got to be able to wake up to that. That's a threat that he didn't have, let's say, 2 months ago, but they've got that now. My biggest concern is what's going on with the individual investor, though, and that they've got to be able to understand kind of when they use leverage, what that really means. Leverage on the way up is a great thing. Leverage on the way down can rip your arms off.
There it is.
I think the Robin Hoods of the world and the Ask Kevins of the world, we got to do a better job of making sure we educate
This man is the primo. I almost have the right name. I think you just said Ask Kevin instead of Meet Kevin. The Ask Kevins of the world should know of the Plotnicks. I love this. I love this man for just how bumbling he is during this interview. It's pretty great.
Individual investor who likes to day trade, to make sure they understand what the risks are when the markets start to turn around and how to handle it. A quick example: if you bought AMC at 10 and it goes to 20,
here it is.
Not enough of a profit. It goes to 30. It goes to 40. At what time do you start to trim that position?
At what time is enough for you? Listen, right now, he's trying to pin the fundamentals against you, right? He's trying to pin the idea that you are the greedy one here. You are the one that should be satisfied with 100% up. What is $10,000 not enough for you? What is $20,000? Is $100,000 not enough for you? And as we stand over the precipice of the greatest wealth transfer in history, I would posture no. Right, that is my hypothesis. No, Mr. XTD Ameritrade. No, Mr. Mike. It is over. I should just call him the wrong name. No, Mr. Mark. It is over, and it is the first time that we, as a small-time investor, first-time investors, unite and say enough is enough. So if you guys like this breakdown of why TD Ameritrade could have already shown you their true colors days in advance of Friday's trading, and how this means if you guys haven't gotten your 2 free stocks on Webull and transferred over to this broker, that is one of the best opportunities, because let me just chart this out with a couple of crayons here. You should understand that if you have one access to the market, right, it doesn't matter how fat your stream is. Let's say that this is how much of your stock. If it gets pinched right here, you won't be able to access the market again. Now, if you have multiple streams, let's say this is your TD Ameritrade stream, this is your Webull stream, right? And this perhaps, God forbid, but your Robin Hoods of the world, maybe just a tiny sliver here, or another broker, you then have the opportunity to be able to control when one of these gets cut off. You still have access to the rest of the market. So use the link in the description, decide how you want to use Webull, right? That's the one I advocate for. TD Ameritrade showed its true colors. You don't want to know who shows their true colors next. And at the very least, I don't know if Apex, the clearinghouse for Webull, is going to be able to be rock solid through the next gamma squeeze, but it was for this one, and it's never been an investigation for having a conflict of interest like Robinhood holding perhaps a short position in GME back in the January squeeze. So in that case, I like Webull until proven otherwise. So make sure to be able to access that. Make sure to diversify not only your portfolio, but the ways that you access your portfolio. And hey, look at all these patrons. There's barely enough room for me on the screen. If you guys want your name to be shown at the end screen here, then go ahead and go down to the description down below and press that join button or the Patreon link to be able to join these fellows right here. In fact, we just had a call with the Gorillionaire and the Space Legends. It happens every single month, and we're going to do another one at the end of this month, Sunday at 9 a.m. The last Sunday, of course. So we'll see you guys in the money. Hope you have a nice day, and peace for now. Cheers.